Hey everybody, Chuck Barone on Thursday, November the 17th, 2022. Welcome back, guys. Sorry I've been gone for a few days. I'll talk about that in a little bit. But wow, I just was out and missed a few days, and look at all the crazy stuff that's happening in the world. I tell you what, you've heard me say the word crazy ad nauseum. I think it's really become like the definitive word on how I feel about not only the economy, but the political situation and everything else going on in this freaking country. And while I was gone, it got even crazier. Oh, I didn't know even where. I got to see what the limit on crazy is. I guess we're going to find out, right? Anyway, as always, want to thank you guys for your support for the show, for all of your Where's Chuck messages. I'm back. I just got tied up with some continuing education stuff from my job, my business. Had to spend some time up in Reno to take the class because I'm late doing it. But anyway, all good to go. Another year as a mortgage loan officer here in Vegas. And glad to be back today to talk about these markets and the state of the world we're living in. Markets today, not much of a day, honest guys. Stock market down small today. I think it's just been so crazy, so much to digest, waiting for the next tidbit of what direction the Fed I guess it's they bet every day. Is the Fed going to come out today and sound like they're going to get tighter? Is they coming out today and sound like they're going to ease up a little? And that's just the way the market's been going on Fed governors and bank presidents out there just talking has been driving these markets up and down and gyrating all over the place as people place their bets what the Fed's going to do next. Markets down small, waiting for the next piece of data to make the market move big one way or the other. Bond market today, prices down, yields up a little bit, not a lot. Market really has been rallying, so we were due for a little bit of a sell-off. 10-year up 8 basis points today, 3.78%. Honest, when it was getting up there to 414, 415, I thought the days of the 10-year under 4% were pretty much finished. I still really believe they are. I think this is crazy right now. I would not want to be a buyer of these bonds knowing what's coming going forward. The 2-year rallying also up 8 basis points today at 4.45%. Now you notice the spread between these. So now you got, usually the way a yield curve looks, it kind of goes across if you're looking at a page of paper, from left to right, it kind of starts out low and then it kind of goes up as the time goes out, right? So a shorter term bond has usually a shorter yield, and the longer the bond goes, the more they're going to pay for the risk premium of that bond defaulting, right? So now you have an inverted yield curve, right? So the 2-year at 4.45% and the yield curve coming down to the 10-year at 3.78%. Well, that's a pretty big divide there. That is 67 basis points inversion. That's big. And they say, I've read that the bigger the inversion, the bigger the recession that's going to follow it. I've seen it get as low as almost 20 basis points, as high as around 50. I haven't seen it with this kind of spread. It's going to be interesting to see the bond market, how it reacts, because we know what's coming in December. The Fed's going to raise 0.5 point. To speculate anyway, up or down or all around, is just silly right now. We know what they're going to do. They've been telling us, and truth is, Fed's been actually doing what they've been telling us. So that's the way I would play it. So seeing these markets rally, we know it's a fake rally. It's a head fake. Dollar today. Dollar up small, but still down pretty good on the index at 106.63 on the dollar index. High was 114. It's come down quite a bit from there. Dollar, it's still the champ. It's just not as strong as it once was. Metals today down. Gold down $12, $17.62 an ounce. Silver down 50 cents, $21.05 an ounce. Holding their own. I think metals are if you got into metals even just a short time ago, you're sitting on a pretty nice little bump already. I think metals, with given the right environment, have a ways to go to the upside. Oil today down, down 4.25%, $81.96 for a barrel of West Texas Intermediate, right back in its 80 to 85 trough. I guess that's where oil's comfortable right now. The market is comfortable with oil because it seems like that's where it wants to stay in that range between 80 and 85. Natural gas on its joyride up 3% today, $6.38 for the million BTU. Guys, don't be trading these markets, okay? They're crazy. Unless you're playing that market every day, you're in that market every day, watching it, just be really, really cautious. Bitcoin today up 150, $16,716. This is another one where I'm going to urge extreme caution here. The stories that are coming out with the exchange crash, FTX, I guess, going underwater to the tune of, I've heard all different kind of numbers ranging from 1 billion to 14 billion. I'm sure there's going to be some fraud. This is not great for the industry overall. Now I've heard some negative stuff about Tether. Be very cautious when you get into speculative stuff like this. I'm not saying Bitcoin or crypto's going away. I'm just saying the cycle right now is very, very negative, and you want to protect yourself from losses right now because it's going to be tough to make them up, right? So be cautious. Market commentary, stuff you guys need to hear. I don't want to, it's my first day back for a little bit. I don't really want to talk about specific, we got those wholesale prices or whatever. I just want to talk about what I'm feeling like this market's looking like, right? So you got the PPI and CPI numbers, the market's cheering, rates are coming down. I don't want to be profane here, but it's a load, man. It's bullshit. They can't. You can put lipstick on a pig. 7.7% is nothing to celebrate. Wholesale prices not going up as high as they expected. Is that really a reason to celebrate? We know wholesale prices still went up pretty dramatically, right? So we know that when wholesale prices go up, retail prices follow that up because they're not going to eat those costs, right? So we know we got more. We know we have inflation now. It's not as horrible as it was. It's not 9. It's just under 8. Wow, let's celebrate. We're winning this war. And now our losses are celebrated like they're big wins. The truth of the matter is, this recession that is very necessary to happen to get these inflation numbers under control has not happened. We thought we were there. We were heading into the summer, 2 negative quarters. Just didn't finish the year that way and is not going to finish the year that way. People in the country seem to be, we're kind of getting divided into winners and losers. It seems like some people not affected by the current situation a little bit, except for a little bit of aggravation at the grocery store or the gas pump. Everybody notices prices going up, but it's really just more of an inconvenience than it is a real burden. On the other hand, we see consumer debt skyrocketing, going crazy, so we know people are charging stuff that isn't like the stuff people typically charge. It's food, it's gasoline, it's the necessaries. So again, we're in this area where the signals are so very mixed, but that, in my mind, emphasizes to be cautious, especially in these markets. The markets are crazy. I mean, when good news is bad news and bad news is good news, and prices are moving with the volatility they're moving with these days, where any kind of news can set off 1,000-point move up or down, that's a great environment for traders. It's just not a great environment for investors, right? So if you consider yourself a trader and you're in these markets trading, great. This is your market. If you're an investor who has a 401k or an investment account and you're trying to grow some wealth, This market stinks, man. And I'm telling you guys, like I have from the very beginning, to be very, very, very cautious and to invest defensively, right? I really tell you from my experience in real estate for all these years, I really do not believe we're anywhere near this cycle of rate hikes coming up. I think that all the Fed really needs is one big upside surprise in inflation, and the entire outlook on these markets is going to change. I'm telling you guys, the philosophy we've had since we started this show, we're new on the block, and I've tried to make the show like I would talk to you when I was a stockbroker at Lehman, when I would talk to my customers. This is basically what you're seeing on this show. I talk to you like I was your financial advisor. I've never tried to talk to people in a super sophisticated investment language that they can't understand to try to make myself look smart, right? I wanted you guys to understand these markets. I want you to understand why we're saying what we're saying. I just have to be very cautious here because I'm not a licensed financial advisor at this point. I'm not a stockbroker at this point. So I cannot give like specific recommendations. I have to kind of make it more of a general newsy kind of a thing than I'm a financial advisor, your advisor. So I've tried to give you the very best I can in a very general way, right? So we go back to the basic philosophy. Number one, start saving money. When you get your paycheck, whether you're saving $50 or you're saving the 10%, we have been advocating since day one, save your money first. Take care of your business. Save as much of your money as you can. Save your money. That's step number one. Step number two, invest your money very conservatively. Right now, it's time to be in a defensive position. You don't want to be doing speculative right now. You want value, not trying to reach for growth. Okay, we've been advising everybody, if possible, if you possibly can, not to add on new debt, especially credit card debt, which is getting very, very expensive to service. So if you have to learn to live without this stuff because the cycle's changing now, and you're not going to be getting cheap money to where debt is a source of income anymore. Debt and money are going to get more expensive. Let's change now while it's painless rather than later when it's painful, right? We've been advising everybody to be more thoughtful the way they spend their money. Try to do less impulsive stuff. Try to hang in there and save the money now, because I'm telling you, down the road, the most desirable stuff that we're going up through the roof over this boom here are all going to be on sale. I've already was reading an article about the prices of Rolex coming down so dramatically. All these luxury items that were like, but everybody had the boom on and were making money, were going up like crazy, are now starting to turn down. Save your money. You'll be glad you did. So these are the things we've been advocating. It's basic finance. It's basic, the fundamentals of how to have a successful life financially. If you don't saving money, if you're not accumulating money, knowing a ton about the stock market isn't going to help you at all, at least financially. So we want to give you the tools, knowledge, to be a prudent, smart investor. But it starts with you, and to do it, you got to have money. So you got to save money. And, I guess I get a little bit of grief sometimes because the show isn't sophisticated. I teach and nag the fundamentals, right? The very basics. If you can't master those, no sense learning the more advanced stuff, right? But anyway, I babble on. I'm glad to be back. I love you guys. I'm going to get caught up on these markets over the next day or so, but I'll be back tomorrow with a message. We'll see where we're sitting tomorrow, and we'll get prepared for next week. Have a great evening, guys. I appreciate your support. As always, if you like what you're hearing, hit that button. We appreciate it. Ask your questions in the comments. I'm glad to be back. Love you guys, really do. Be back again tomorrow. Till then, take care. Thanks.